Having understood the types of charts in the forex market, which are the line charts, the bar charts, and the candlesticks, in this session we're going to be focusing more on the candlestick. What is the candlestick? Because where you're going to be focusing on the candlesticks, that the candlesticks is the most common method of analyzing, the most common chart that traders use. Okay, so without wasting much of our time, let's get to business. What is a candlestick? A candlestick is a type of price chart using technical analysis that displays the high, the low, the open, and the closing prices of a security for a specific period. They are used to describe the price action during the given time frame. The long body candles indicate strong buying or selling. The longer the body is, the more intense the buying or selling pressure. That means that either buyers or sellers were stronger and took control. The short bodies implies very little buying or selling activities. In trading lingos, bulls means buyers and bears means sellings. Okay, so what's a candlestick? A candlestick is a type of price chart using technical analysis. It displays the high, low, open, and the closing prices of a currency pair for a specific period. And that's to say, the candlestick tells you what happened. It tells you the highest points the market reached at a particular period of time, the lowest points the market reached at a particular period of time, the open, where the market opened, and where the market closed at a particular period of time. It also tells the price action at the specific time frame. It describes the price action during the given time frame. For example, on a 1 minute time frame, the candlestick tells the price action at 1 minute time frame. That's what happened in that 1 minute. Okay, it gives like the price that it gives information on that particular time frame. Now, the long bodies indicates strong buying or selling. That's to say, the long bodies indicate strong momentum in the market. Either that we have strong buying or strong selling, and the longer the body is, the more intense the buying or selling. That's the longer the candle, the stronger the buying. All right, the longer the candle, the stronger the buying or selling pressure. So it simply means either the buyer or sellers were stronger and took control. The short body implies very little buying or selling activity took place. In trading lingos, that's trading terms, the bulls means buyers and the bears means sellers. So when they say the long bodies indicate strong buying pressure or strong bulls, strong bears, you know what I'm trying to say. The longer the body, the intense the buying. Okay, that's what a candlestick is. A candlestick is a type of price chart that displays the high, the low, open, and the closing prices of a currency pair for a specific period. Moving on to the next, the candlestick anatomy. We're going to talk about the candlestick anatomy. That's the parts of the candlestick. So on our screen here, on our left hand side of the screen, we have the bullish candle. The bullish candle in most scenarios can be represented with green, and the bearish candle in 90% scenario is represented with red. Although the color doesn't matter because you can customize the color to your own taste. Okay, so let's get to business. The wick here, the little spike up here, can also be called the shadow or the upper wick. The little spike here can be called the shadow or the upper wick. Now, the top here is what we call the high. What is the high? The high is the highest point the market reached. The high is the highest point the market reached. Okay, at that particular period of time. For example, as at 1 o'clock, this is the highest point the market reached. This is the top of the wick. Okay, this particular level it indicates that the bull had pressure that pushed up to the downside, and the bears entered into the market and pushed it down and gave a close. Now the close is where the market closed. Okay, towards the downside we have the low. The low is the lowest point the market reached. The lowest point the market reached, and we have the lower shadow. That's what happened here. The market opened, then the beginning of the body we have the open. Now note this: for a bull candle, the open is usually below the close. For a bullish candle, the open is below the close, while for a bearish candle, the open is above the close. That's to say the close is below the open. For a bullish candle, the open is below the close and the close is above the open. For a bullish candle and for a bearish candle, the close is below the open and the open is above the close. So basically what we mean now let's describe this candle. What happened here? Let's give price at that. Let's give that what happened there. Now market opened at this level where we had the open. Market opened at this point here, had some bearish pressure came to the market and pushed the market to create this low. It went down and created a low. Then some bullish pressure entered and pushed the market up to create this high. Upon creation of this high, some bear market entered and pushed the market towards the downside to create the close. Okay, we're gonna see more of this on our charts. We're gonna explain, okay, with live candles. The market opened at this level, had a strong push towards the downside, then closed here, then created the low, and then had another push towards the upside, created the high, and another push that created the low, where we got our upper shadow and our lower shadow. Then this space here is the body of the candlesticks. The longer the body, the stronger the buying pressure. The shorter the body, the shorter the buying pressure. You want to know more about candlestick? You visit www.babypips.com to get types of candlestick. Okay, so let's go on to the bearish candle. For a bearish candle, we have the low at the same point with the bullish candle, the high at the same level with the bullish candle. The high is the highest point the market reached, the low is the lowest point the market reached. We have the close and the open, then the body of the candle. We have the low, the close, and the open. What this simply means that market opened at this level here. Market opened at this level here. It pushed up to create the highest point the market reached. The market went down, pushed to create the low. It went up again and had a close at this level. This is what we call the body of the candle. That's the candlestick anatomy. We want to see next. What does candlestick tells you? The candlestick tells us exactly what price has done within a specific session or time frame. It tells us at what price it opened at, what price and at what price opened at, what price closed at, and the highs and low. What does all this mean? It tells us where price opened, where price closed, and also tells us the high and low of market at that particular time. What candlesticks info means? The bearish means pressure to the downside, price decreasing. The bullish means pressure to the upside, price increasing. If the price is moving down, it means we are seeing a bearish market, and if the price is moving up, it means we are seeing a bullish market. So on a candlestick, whenever you see a bearish candle, it tells you that price was decreasing, price was going down. Or whenever you see a bullish candle, it tells you that price was going up, that's price increasing. So if the price is moving down, it means we are seeing a bearish market. We had a bearish market at that particular time, and if the price seems to be moving up, it simply means we had a bullish market. So if as at 1 o'clock you saw a bullish candle, a candle that had the open below the close, a candle that had the open below the close, that's a bullish candle. If at 1 o'clock, it is basically same as at 1 o'clock the market was pushing towards the upside, price was increasing. Then if as at still 1 o'clock or 2 o'clock you see a candle that creates, it has the open it has the open above the close, then we have a bearish candle. Okay, and the bullish candle has the open below the close, and for a bearish candle has the open above the close. Okay, move on to the next topic, types of candlesticks. Now the candlesticks can be grouped into the retail candlesticks and the institutional candlesticks. The retail candlesticks are candles with shorter bodies and longer wicks. Institutional candles are candles with longer bodies and longer wicks. Okay, so with that being said, that was our basic of the candlestick. That's part of the candlestick and the candlestick anatomy. We're going to be going over to our charts to understand more on what has been said. Okay, so having understood the anatomy of a candlestick, we're going to be heading into the live chart to see exactly what I taught you guys. So on my screen here, you could clearly see we have some figures, some not really figures, some shapes. Okay, The green ones indicate the bullish candles and the red ones indicates the bearish candles. Okay, so all these candles, it must not necessarily be this color on your chart. You can customize the color. Remember I told you guys, introduction to trading view, when you go to settings here, you can change the appearance of your candlestick. For example, you can change the body and the products and the wick. So let's get to business and understand the candlestick on live chart. If you look on live chart, so we're gonna start with the very, very clear candlestick you can see, which is this red candle here and the green candle. Okay, so let's explain what happened here. The market opened for the bearish candle, the market opened at this level. Market opened at this point here. It had a push towards the upside. Let's say the buyers were in the market. They pushed the candle towards the upside to create the high at that level. Okay, after that push was being created, after this giving out this strong push towards the upside, market came down, pushed towards this level to create the low. Okay, at this point here, this candle doesn't really have a low. So this gap here is what we call the wick. If you can remember in our explanation, the gap here is what we call the wick, and this is the body of candle. Now, we had a very long bearish candle in this scenario. This is a very long bearish candle, which indicates that we had more sellers than buyers in the market. It's a very strong and also a long. Remember, long candlesticks indicates institution in the market. That is big players are in the market. So we had a very long candlestick, which is an institutional candle. So if you look at the green candle at this level here, explaining what happened here, let's use this candle for example. You can see that this is the open of this candle. This is the low of the candle. That is the lowest point which market. When the market opened at this point, it gave a push towards the downside to create the wick and also create the low. Upon that happening, that was the sellers pushed the market from the open towards the downside to create the wick. Then the buyers came in and pushed the candle up, created the high of the candle, which was this somewhere around here. That was the high of the candle. And after that was created, the sellers came into the market and pushed it down a little, and the candle ended up closing here. Now we are currently on the 1 hour time frame, which indicates that each candlestick printed here indicates what happened in 1 hour. You understand? At that particular hour, this is what happened. Okay, so moving on to the left side, let's identify more candles. Okay, let's identify more candles on our screen. Now, the longer candles, remember, are the institutional candles. The longer candles are the institutional candles, and the shorter candles are retail candles. Those are the two types of candlesticks you guys should understand for now. If you want to know more about the types of retail candle, you have to visit www.babypips.com. There you see all types of retail candles. So let me explain this bullish candle here. It is just the same thing with last one I explained. The market opened at this level here. Okay, let me use the market opened at this level here. Okay, after the market opened at that level there. Oh god, what's already these tools? Market opened at this level here. Then it had a push towards downside, creating a low at that point. After the market opened at this level here, the sellers or the bears entered the market and gave a push towards downside, creating the low of the market. Then the bulls came into the market and they pushed it up. Okay, they pushed it up to the top here, creating the high of the market, which you can see somewhere at this level. They're creating the high, which you can see at this level here. Okay, after the high has been created, the bears came into the market and also pushed it down to create the close. Okay, so barely on this bullish candle, it opened here, it had the close and also closed at this level. This was the highest point the market got to, this is the lowest point the market got to. Okay, and this is the complete body of the candlestick, indicating that we had an institutional move occurred here. Institutions were present in the market. It's very simple. Now let's explain a retail candle. Now look at this candle here. It's a clear example of a retail candle. Let me zoom out my chart. Let me zoom out my chart, okay, so you can see clearer. So on this candle here, we clearly have this is a retail candle, 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 this is a retail candle. Okay, so this candle here, you clearly see the market had the open at this level. This was the open. The open for a bearish candle is always above the close. The market had the open here, bulls came into the market and pushed it up and created a high at this level, which was like the high created. Then the bears came in and pushed it down to create the lowest point the market got to, which is at this level. After that was being created, we had the close. The bulls came in and created the wick. that meant to led to the close of the candle. And here we have the body of the candle, the high of the candle, the open of the candle here, the close of the candle, and also the low of the candle. All right, another example, or in this case we're going to be using a bullish candle. Okay, a bullish retail candle. Now all short candles you see here are clearly the bullish retail candle. Any short candle you see on your screen is a what? Bullish retail candle. Okay, so let me move this tool a little bit closer here. Good. So this candle here, you can clearly see that it had a open at this level here. This is what we had our open here. We had an open at this level. We had our low created, that's the lowest point market reached at that level. We had the highest point market reached at this level, and we also had the close at this level. So the market basically opened here, pushed towards the downside. The bears pushed the market towards the downside to create the low, and the bulls came in and pushed the market towards the upside, creating the high. After that was being created, the bears came in and pushed the market and ended up creating the close of the day. So at that particular hour, the market opened at this level. The market opened at 0.99273 on Euro USD, had a close at 0.99328. Then the highest point market got to was 0.99365, and the lowest point it got to was 0.99265. That is at 7 p.m. Okay, if you look at my cross chamber, under here you have the time. All right, the time is indicated here. So as at 7 p.m. the market had, interpreting this candle here, as at 7 p.m. the market had a high of 0.99382, had a close of, the market had opened at 0.99331, created a high, reached the highest point of 0.993864, created the lowest point, that's the low of the candle, of 0.99264, and also closed at 0.99276. So this is basically the candlestick. Okay, still giving more examples on that. Let's go into a shorter candle. Good. Now in this case, in this scenario now, what do we have here? You look at this candle here. Yeah, you look at this candle here. This is the candle we're going to be talking of here. Okay, so this candle here, we have the open at the top here. We had the open at this level, the highest point market got to at this level, which is the high. The lowest point market got to at this level here, and had the close at this level. So if you look at below my cross chain, you have like 22nd of August 2022 at 2 a.m. So at 2 a.m. now, interpreting this candle here simply means that the market opened at 1.000281. It had created a high. The highest point the market got to was 1.003115. The lowest point it got to was 1.000231, and market closed at 1.00275. So the market had it open at 1.00253. It had the highest, created the lowest points of 1.00228, created the highest point, that is the high, had a high of 1.00372, and the market closed at 1.00279. So that's basically the candlestick on a live chart. The same thing implies on all other candles you see on your chart. The same thing implies down. Looking at this candle here. Look at this candle here, okay? Good. This candle at this level here, you clearly see that we have our low of the day at this point here, our high of the day, or a particular hour at this point here. We have the open of the candle. This is a bearish candle. Have the open here, and we also got the close at this level. Okay, this is the upper wick or upper shoulder shadow, and this is the lower wick or the lower shadow. So basically, interpreting this as at 2 o'clock on the 19th of August 2022, the market opened at 1.00791, created the highest high at 1.00834, created the lowest low, that's the lowest point the market reached, or the low was 1.00695, and market closed at 1.00750. So that's basically the information on the candlestick. The candlestick tells you where the market opened, where the market closed, the highest point the market got to, and the lowest point the market got to. Now, the candlestick has so many information. So with that being said, that's everything about the candlestick anatomy. We'll be moving on to the next class, and thank you all for being with us.